Greetings, members one and all of the Salivation Nation. Everybody thinks gold is rising from the bottom. Let's explore. In other words, almost everybody believes that we have hit that bottom and are on our way up again. We did see two different periods over the past couple of months here, moving from this year, that gold was trading just below $1,700 an ounce. It is now comfortably above that period, and though many analysts are predicting that gold could trade around these levels, most everybody believes that we are going to see 1750 and above from here on out. It may not go parabolic, but that reminds me, I have not done my gold prediction video for 2021 as I did for silver. I just got sidetracked, but I need to do that before the year gets too far advanced. But let's take a look here. As of the recording of this video, we are seeing the spot prices dip in all metals except for palladium, slightly, but there's enough of a notable movement that gold is now trading below that 1750 number. But there's an article here from Kitco from a survey that it's only a matter of time before gold prices see a sustained break above $1,750. Near-term sentiment in the gold market is once again bullish across the board, as the precious metal prepares to end Friday near a 2-week high, according to the latest results from the Kitco News Weekly Gold Survey. There's been a strong boost in optimism in the gold market as prices have managed to hold critical initial support and appear ready to reclaim their critical psychological level above $1,750 an ounce. However, although sentiment and the price action have improved from a dismal first quarter, some analysts warned that it might be a little too early to sound the all clear. In fact, this article was probably written before this recent drop in prices to below about $6.10 below that level. But I do agree with it. Adam Button, chief current strategist at ForexLive.com, said that the market is in a precarious position. A close above 1755 would confirm the March double bottom and point to $1,840. If it fails, then it's right back to 1676 or below, he said. Now that is a pretty big statement to say, that if it doesn't reach 1755 at the close, and that is this week, that it's going to go that low. I kind of doubt it, but we'll see. I guess other things have happened, and apparently everybody else agrees with me. We'll look at these numbers here momentarily. This week, 15 Wall Street analysts participated in Kitco News Gold Survey. Among the participants, 9 or 60% called for gold prices to rise. At the same time, bearish and neutral analysts were tied for another week, each viewpoint garnering 3 votes at 20%. Meanwhile, a total of 1,201 votes were cast in online Main Street polls. Of these, 778 respondents, or 65%, looked for gold to rise next week. Another 236, or 20%, said lower, and while 187 voters, or 16%, were neutral. So there you go. So the bulls are certainly winning in this survey here for where they think the prices of gold are going to go, with Main Street being more bullish than Wall Street, but pretty close numbers here, I would say, between the two. Sentiment has slowly been improving among Wall Street analysts and retail investors after prices recently attracted some technical bullish momentum after bouncing off critical support below $1,700 an ounce. June gold futures last traded at $1,746.10 an ounce and are looking to end the week with a modest 1% gain. The gold market was hit with some selling pressure Friday after bond yields and U.S. dollars spiked following stronger than expected producer price inflation data. The report said that annual headline inflation rose 4.2%, which is the strongest rise since September of 2011. Wow, that's pretty scary. That's almost double what the target is for the Federal Reserve. Charlie Nedos, senior market strategist with LaSalle Futures Group, said that he is looking past the bond market sell-off as he does not expect the Federal Reserve to raise rates anytime soon. Yeah, not going to happen. They're saying not till 2023 for that. The Fed said that it wants to see real numbers and that they aren't paying attention to this anecdotal data. I think this is going to cap the U.S. dollar and support gold. We can already see the U.S. dollar is unable to hold above its 200-day moving average. Neto said that he is also bullish on gold as the price has been able to hold above its 200-day moving average. We have tested the low end of the range, and now it's time to test the highs. I can see gold testing resistance above 1760 an ounce. Darren Newsom, president of Darren Newsom Analysis, said he also sees signs that the U.S. dollar, at least in the near term, is losing its bullish momentum. He added that he sees potential for higher gold prices next week. However, not all analysts are bullish on gold, especially as the price dropped below 1750 on Friday. So apparently they did write this article or was updated at this particular time, since it is now under that 1750 level. Stronger dollar and higher rates may depress gold next week. Data shows that the U.S. economy and prices are surging, said Mark Chandler, chief market strategist at Van Ockburn Global Forex. A break of the 1728 to 1730 dollar level could see a test of the 17 to 1710 level. Adrian Day, president of the Adrian Day Asset Management, said that he is neutral on gold and there appears to be some downside risk as the market enters a consolidation period. I suspect the next few weeks could see a gold trade within a band, perhaps 1680 on the low and 1745 on the high, before breaking out on the upside. And that last sentence, or that last phrase in the last sentence, is where I'm at, because I believe we're going to see bullish prices by the end of the year, or at least some point in the year. So it is interesting to see. This metal has certainly done some amazing things over the past year, broken records, pulled back a bit. But remember, it's not been that long ago when we would have been shocked to see $1,700 silver. In fact, I remember on a Sunday night market watch, we did see gold break that $1,600 level based off of a geopolitical event that occurred at that time, and it seemed pretty groundbreaking. But now we'd be happy to see those prices as buyers these days. It's amazing how perspective change for this amazing metal, gold, that's out there and the marketplace being bought up. And yes, you can still buy it, but there is higher premiums on the metal. But there are more gold bars out there, I've noticed, of some of these bullion dealers, and big gold bars available than there are silver bars. The squeeze is on really for both metals to a degree for the products that are available. So yes, indeed. Now, one thing the report did not mention is the unemployment numbers, which were unexpectedly low. But I think for many of us, I think we're kind of not surprised based off of what's going on in the marketplace. The economy is delicate right now. As certain sectors improve, there's other portions of the economy that I think are damaged beyond repair, and we're going to eventually run into a situation where we're going to have a double dip or some sort of other recession. And of course, with the dollar reset that's coming, I think there's something that we need to take into account and consider what's going to happen in that part of the economy. This is why we hold gold. Gold is a way to preserve our wealth against times like these, and concern about not only our dollar, our currency, but also just the general economy as a whole, not just in your nations, but around the world. What happens around the world can affect us. And obviously, that is the case with the dollar index, because the dollar is only doing as well as it is because all the other currencies are doing worse than what we're doing, which is why I think that the Federal Reserve, politicians feel emboldened to be able to print these dollar bills like they're going out of style, because they feel like, you know what, we're the dollar, we're indestructible, and so far it's working. People still have faith in this dollar bill, but it will only go on for so long. And that is something to take into account and realize, is that they can only do this for as long as people have faith in the dollar. And most of us don't want the dollar. You would be a fool to want the dollar to fail right now, because we need it in order to buy goods and services. If it were to fail, everybody would be in a world of hurt, no matter who you are, no matter where you are, and really no matter how much gold and silver you have at this particular point in time, because in the immediate aftermath of a dollar collapse, it's going to be tough. Now, you will have that gold and silver to protect you for sure in a transitionary period, but in the immediate aftermath of it, it's going to be a world of hurt for any of us. And I think that fact alone is what is, in a way, keeping the dollar propped up. And we don't want it to fail. But the thing is that sooner or later, something's going to give in that area. And this is why we hold gold and silver. But Main Street, Wall Street, they are bullish, as you can see by the chart here from this gold survey, which is done weekly. And once in a while, I'll cover these things to kind of get the sentiment of both markets and kind of see where people are. But it is clear that everybody is bullish on gold, and it's a good idea to have it, and silver too. Let me know your thoughts in the comment section below about this news and where you're at as we head into the weekend here. I want to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.